Welcome to the proptrade.com and welcome to our Tuesday live webinar. Today, there's not a great deal of news flying around today, so I thought I'd do a bit of explanation of some of the strategies I use on a daily basis. And today we're going to look at the MACD, the MACD, and the PSAR, or the Parabolic SAR, two very simple, quite popular indicators. MACD is much more popular than the Parabolic SAR, that's for sure, as in trading circles. But combine the two, and I use it for swing trading and trend trading strategies. But before I wanted to kick off, I just wanted to highlight our new PayFlex account. We've tweaked it a wee bit. And from $9.99, you can get any account size. So from $5,000 up to $100,000 account for our new PayFlex account with some new structure around it. So 3% profit target, 50% profit share, and the evaluation phase with the PayFlex is there for you to get going from $9.99, and the payment is also very, very attractive. So choose, as it says on there next to me, choose the account size that fits your goals without paying more upfront or chasing unrealistic targets. So literally from $9.99, get yourself onto our new PayFlex account, and I'll pay for it later on as you go through the payout cycle. Okay, so end of advert. What we're going to look at today, we're looking at trend following strategy, a swing trading strategy I've talked about many times before. It's on my default, one of my default setups on my trend trend signal account. So we'll have a look at that as well, some live charts when we explain the background of it. But basically, let's have a quick run through what trend following is, what swing trading is all about. So you're looking for turns in the market, basically. This is my little mantra I've used for well over 30 odd years now. Do what's probable, keep it simple, and it's all in the numbers, probability, simplicity, and time frames. The beauty of this approach is it works on all time frames. It can work across all assets. It's better in some of the higher time frames, the hour plus, I'd say. But the data, when we back tested it is equally good on shorter time frames as well. So that was just a gut feeling I had that it was better on sort of the hourly time frames, daily time frames. But when it came out in the wash, when we back tested it on hundreds of trades, it actually was equally as good on the lower time frames. So, but whatever type of trading you are trading, you do. The most important thing is this little bullet point here: know yourself. It's a mind game. Trading. It's about a matter of managing yourself, managing your risk, not going for it too aggressively. And again, that's what all our different account sizes allow you to do that. So know yourself, manage your risk, and the ceiling. There isn't no ceiling. The sky is the limit, as we say. So we're going to look at what is swing trading, about when to do it, and how systematic it should be, what makes a good swing trader. And we're going to look at this one in particular, the Parabolic SAR and MACD strategies. Lots and lots of different strategies. I've got 5 or 6 that I use, but we're going to concentrate on the Parabolic SAR and MACD today, or the MACD and Parabolic SAR swing trading strategy. And obviously, there's no one going to kid you to listen to a free webinar and give you a holy grail. There's no such thing as holy grail. Just understanding yourself, education, discipline, skill, and hard work, and accepting your losing trades. This quote here comes from Trevor Neal, a bit of a mentor of mine back in the day. Okay, so swing trading, they are trend following trading. Swing trading, look for turns in the market. We typically hang on. So my end of day strategies, for instance, are based on swing trading, speculative by nature. We hold on to a position for 1 to 2, 3 days. We're looking for a price change, a turn in the market. So whether we're looking for ABC, 1, 2, 3, Elliott wave patterns, zigzags, whatever it is, prices don't move in straight lines, and that's why they, move in waves. whether they're going up, whether they're going down, or not going anywhere. It can wave sideways. But for a mean reverting strategy, something that's going sideways when markets are in channels, swing trading isn't great. Trend following isn't great because it isn't a trend to follow. We might be moving from the top to the bottom of a channel. But swing trading setups don't work particularly well. But the 2 or 3 key things we do need for a market to turn is liquidity. The best liquid and volatile markets, ones that are moving up and down, are the ones that turn, ones that swing, ones that hit certain level strategies. So whether we're marking a retrace in a big downtrend and a bounce back up, or vice versa, a bounce down from a very strong move up, we need markets that are liquid that we can get in and out of quite quickly. So illiquid markets, things like exotic forex pairs, small cap stocks, it's a friction on profits, just like a commission or a tax. So when you're running your trading business, you've got to think of the ability to liquidate your profits quickly, liquidate your losses quickly as well. So you need a market that's moving quickly. And if something isn't moving quickly, or there's a big spread, or there's friction between, lots of slippage and friction between when you place your execution, when you place your price request and it getting filled, all of that adds to your cost of trade. So you need a nice liquid and a movable market. Typically, swing traders, as I say, work on the daily time frame, but it can and does work on shorter time frames. Don't ignore the 4-hour, 1-hour time frames for getting in, getting out. It's not mean reverting. We're looking to try and stay on something for many hours or days, as we said, typically 2, 3, 4 days sometimes. And therefore, we look at what's going on in the higher time frames of a bit more necessity. So the weekly and the monthly, are we in line with those when we're taking an end of day trade? If we're taking a 15-minute trade, what's the 4-hour trade? What's the 4-hour trend doing? What's the daily trend doing? The trend is very much a swing trader's friend. They very seldom go against the trend. They go with it because why fight gravity? So typically, I say 4-hour, 1-hour, and daily. Typical fine trades holds for days, weeks, or even to months sometimes. On big long moves. So moves within moves, this is the higher time frame, the big fat one. We have shorter moves being volatile, the mid thick line, if you like, and then the smaller black line that's rotating through the higher time frame, with much more volatility. So, but the trend is still generally all unison. So as this smaller trend is looping around the higher time frame, the market is still moving up. And similarly here, as the market's moving down in the high time frame, so are the smaller, so is the medium and the slower, the faster time frame. So it's all about moves within moves. What's the higher time frame, or the intermediate, the short, and the long term time frames doing? So whatever approach you have a system, trade your system. This is one of my little mantras: accept your losers, bag your winners, and just repeat steps 1 to 4, and you stay in business. So have a system with a bit of an edge, understand what it does, back test it before you risk any real money on it. But bear in mind, back testing it's far from everything. It's not the real market. It's not real execution in real markets. But understand your system, accept its pros and its cons. More importantly, accept your losing trades, keep the losses small, especially when you're starting. But even when the system seems to be working quite well, because you will inevitably go through periods of big, not big drawdowns, but significant drawdowns and prolonged drawdowns. And it's just a matter of making sure when that happens, you've got the ability to reduce your risk per trade, and never focus just on 1 or 2 trades over, I don't know, say 1 or 2 trading sessions, but look at the whole equity curve of your entire system over its longevity, over its entire life. And if you end up risking too much, that's why you never get 100 100 trades to test if your system's working. So don't risk too much. When you do lose, keep it small, but accept that you will have them. And when the winners come, let them run, but don't be afraid, to close them out as they're running, and don't give too much profits back. That was a big problem I had when I first started, letting winners turn into losers, and that doesn't happen anymore. So bag your winners, accept your losers, and understand what you're doing. Okay. A good swing trader is, technical trader, price action, whether it's just pure price action on the chart, or whether you're using old-fashioned strategies, many call them now, like the MACD and like the Parabolic saw, whether you're using or the sort of topical systems, whether you're using old candlesticks, whether you're using Ikanashi candles, whatever it is, understand what you're doing, check it, back check it, make sure it has an edge, and check when the trends kick in. You're around about, when to get in and when to get out. Don't fight the trend. Understand, the difference between a retracement and a reversal. If you're a Elliott wave trader, ABC, zigzag, 1, 2, 3, whatever it is, understand the technicalities of that approach, and make sure that this really is leg 3, or it really is leg 4. It's not just a hiccup in leg 2 or 3 or whatever it is, but understand what you're doing. Understand candle patterns. Everybody uses candlesticks these days. If you don't, that's fine. Again, if you're a pure price action trader, it's up to you. Find what works for you. Lots and lots of candle patterns, lots and lots of candle formations, and they've been tested literally over the centuries now, candlestick formations. So find the ones that work for you. Different candle patterns have different success rates and different profitability targets on them as well. So understand, I say, what works for you. So we're going to use a very simple one today with using two simple indicators, the MACD and the parabolic SAR. Back test your system. So understand some simple indicators. Don't overcomplicate it. So if you have a trend line, don't keep moving it around. I'm hopeless at drawing trend lines, to be honest. I love fib levels. Some other oscillators like stochastics potentially, but always keep your losses small, manage your emotions, and understand risk management inside out, and get in and get out at appropriate levels. You're never going to catch the whole of a trend, whether it's going up or going down, but don't beat yourself up. If you're getting any profit is profit, but analyze each and every trade, each and every session at the end of each and every trading session. But look at the long term and how consistent you are over the long term, because that's what we're looking for. Consistency breeds confidence, and you don't want to be staring at the chart all day, hours on end. If you're a swing trader, you want to be able to identify an entry, identify an exit, and then be happy to leave it to run. Give the system and the trend time to develop for the swing to move. Don't get the stop loss too close. Equally, don't get it too far away. That means you're gobbling up all your margin. You can't take other trades if they come along while this trade is still open. So it's all about managing that whole. Always about the whole, not in any individual trade. Okay, so lots of ways of doing this, and today we're going to look at the parabolic SAR and the MACD. Okay, so what are they? Well, let's just bring in what it looks like on the chart. So why's that gone funny? Right, we're just going to use, I don't know. Does anybody want to give me a chart to? If not, I'm just going to use whatever's on my chart here. So let's use. What's this? This is the Nasdaq on the hourly chart. Let's just have a look at the. Let's just use this. I don't know. Let's pick the. Let's start with the daily time frame, shall we? Let's use the Nasdaq on the daily time frame. So this is our. In fact, let me pick a chart we don't normally use. So let's just use one that's got no lines. Let's use the I'm going to put some completely not random. Well, let's use the Aussie chart for example. Okay, because there's no previous indicators, no previous lines on this. Is this is just the two indicators, and again, it'll demonstrate what I mean about any asset at any time frame. So two indicators here: the parabolic SAR and the MACD. So they come as a standard setup on this. I haven't tweaked them at all. So here on Trade Locker, the parabolic SAR comes out as blue dots either above or below the price action. Parabolic SAR it does exactly what it says. Parabolic means it's moving quite aggressively, quite quickly. It can be quite choppy, it can flip around a lot, particularly in sideways markets. So we use the MACD as our first indicator, and then we enter and exit on the parabolic SAR flipping. Okay, so this is the Aussie stock market, and the MACD set up again as standard 12, 26, and 9. If I just show you the settings on the MACD. So again, whether you're using Trend Locker, MT4, C Trader, it comes as a default at this setting. So the key settings are the fast, the slow, and the signal length. So the fast is set at 12 defaults, slow gives us 26, and the signal length is 9. So 12, 26, and 9. These are exponential moving averages, and the distance between the MACD line and the signal line, the yellow and the blue line here on the chart, and the histogram is the distance between the two EMAs. So what we're looking for, our first indicator is a cross of the MACD and the signal line. So if I just go back to this, sorry, if I just go back to the settings, you can see so that's our inputs. The MACD line is the blue line, and the signal line is the yellow line on this. Let me make it a bit bigger so we can see a bit thicker. So we want a cross of the signal and the MACD lines, our first indicator, and typically we'd like the histogram to be in the direction that we're looking. So you can see here the last significant. So here we were moving down. The blue line came from above to below the yellow, and that's the first cross there on that point there. But at this point, let's just do these. So that's a clear cross there. Here, whenever this was, the 28th of October, market had been going up. Parabolic SAR had been most of the time underneath, but the parabolic SAR was still hadn't flipped to above. At this day here on the 28th, the parabolic SAR was still underneath, so it hadn't flipped. So the MACD signaled there, but a confirmed entry was when the parabolic SAR flipped from below to above the price action. We had a big move down, so that this system on this time frame would have triggered an entry here, would have triggered an entry there, and on that move there. In fact, it might have actually not, that cross, although we're looking at it down on a daily time, but that mightn't have been a clear, significant cross till the following day, till we'd had this big move down. So definitely we would have got in here on the 29th of October. Now then, the stop loss could have been either typically I'd have it 2 or 3 candles behind my entry candle, so my stop loss would have been here on this particular strategy. Another way of using the parabolic SAR is to use it as a catastrophic stop loss level. When I say catastrophic, it means it's a long way. It's gobbling up an awful lot of margin. So you could have had your stop loss, and many people do that, that are trading in these set and forget type swings when they see a big swing. So that would have been our worst stop loss. Probably I would have had mine round about there, that top there somewhere, 9,076, something like that. 2 or 3 candles behind. Some others with a big candle like that could have been a bit more aggressive and just entered it on the actual entry candle. I tend not to do that myself, but still, that's a big old margin taken in. And we don't necessarily set a target here. What we're doing, because we're looking for a swing, because we're looking for a turn in the market, like we've seen here. You can see the turn in the market here. up here. You see it's rolled over. We've had a turn there as well. There's that next cross. So that's what we're looking for. So we're looking for to trail this down. So you can see if we'd the beauty of the parabolic saw is quite sorry. It's using it as your stop loss. It's it can be catastrophic because it's a long way away. But I need to do that. So that don't I? No, I don't want that one anymore. I want my lines on there. We are. So if that was our stop loss on our entry candle, we can using the parabolics as the trend moves down. As the parabolic SAR plots the next one, you can see it took 1, 2, 3, 4, 5 days before the next X came. It happened to come. The next one would happen to be the next day. So you can see here as the trend moves down quite quickly. Sorry, let me just get rid of that. As the trend moves down quite quickly, the parabolic SARs can either bunch together, and then as we flatten out, you can see they actually get quite close together. But as we got moved down, the gap and there's bigger volatility, the bigger candles, the gap between the parabolic SARs can move. So it doesn't necessarily move every day, but when the next one is. So that one did move the next day, didn't it? The next one was plotted there, and the next one was plotted there. So at this point here, by the time we got here, we were our stop loss here is ahead of our entry. So we're in the money here after 5 or 6 days of the trend. Obviously, the other way of doing it is just to manually count it down yourself. So if we say my preferred route would have been the stop loss there, big entry candle. So wait for a while before we pull it down. But I'd have been down here probably on this candle here after 2 or 3 days, or maybe just about halfway through that candle. But you can see the point I'm trying to make. In strong trends, the parabolic SAR remains the right side for a long time before it flips. And as you can see here, just ignoring the histogram for a minute, you can see that the signal line and the MACD line, there's nice distance. They're both angled down quite nicely, so there's a nice angle on the trend lines, and there's plenty of fresh air, daylight between the MACD and the signal line as well. So we flatten out a bit here. You see this flattening here at the blue line, the yellow line less so, but the MACD line here, and that's because the price action sort of slid sideways a wee bit, didn't it? Had that big reversal here on this day here, back to our entry level. So if we pulled our stop loss down too aggressively in the first 3 or 4 days, we might have been reverse stopped out. But as you can see, this has moved down really nicely, and then you can use a combination of the two. So here, we can step down with the parabolic as the price action goes. So on this day, we're down there, so we're down to here now, but the price action has gone all the way down there. Here again, you might have had it here, top of this candle and this wick there. If we'd used the parabolic SAR, we would have been stopped out as it's reversed. So we've given up all that. But as with most trend following strategy, that's what happens. You don't get the whole of the run. But even so, we get taken out here. We've got all of that. Didn't get quite in right at the top. We didn't get quite in right at the bottom, but we've taken a massive amount of that. We've taken the majority of that run, haven't we? We've taken the majority of this big leg there. We've taken all of that of this extent. That's the total run, but we've taken a nice old chunk of it. Okay. So next, then, what happens next? So we got out on the reversal of that. The flip of the parabolic, but the parabolic SAR has flipped on this day, so we get out here. That's what we're using it for. We don't take a long trade now until there's another cross of the MACD and signal line. So that's the first. So we do it in 2 orders. So the MACD and signal line cross, that's our first indicator, and then we've got to be wait for the parabolic SAR to be in the right direction as well. So what we're waiting for now, so we've got out here on the on the 24th. So we've held this from the 28th of this one here. We've held it from the 20. Where is it there? So there we are. So we've held it from the 29th of October to the 24th. Sorry, the 29th of October here on an end of day basis to the 24th of October. So nearly a month. So the question is, as an end of day trader, I'm happy to do that, and I've held trades for that length of time. We were talking about swing trades at the beginning, weren't we? Of only 1 or 2 or 3 days. Have you got, the patience and the is that fits with your mindset? Keep holding a trend till it's running and running, and wait for it to reverse for a day or two before you actually get out of it, which is what we've had here. Obviously, these are day candles. This could be the same if this was, hourly candle. It's still many, many hours that trend has ran for. Now then, the next one, just again using this Aussie as an example, we then get across of the blue line from crossing from below to above the yellow line here on this day, literally a few days later. Okay, so if I just take all that off there. That's our first long trade. Our second trigger is here, and you can see what's happened here on this day here. Change that to purple. Can you see that? That's purple, right? So you can see here by the 27th of November, we've triggered along on a down day. We've had a cross of the signal line and the MACD. The histogram's actually turned green as well, so that's in our favor. But the parabolic SARS had already flipped, and that's one of the issues with the parabolic. So it can be quite flippy. Okay, but this is a good example of what nothing ever. Nothing, obviously, part of the nothing is perfect, is basically what I'm saying. So we've got in here now. The green line is here now on the close on the 27th. Our stop loss now, if we'd had a stop loss on the close of the candle we'd use, it'd be very, very tight. If we'd had it right at the bottom of the turn, it'd be down here. This time, the parabolic SAR is it's still a hefty old stop loss, but we can use that to go in. Now then, this is what I'm going to say when things don't, go our way. So over the next week or so, price just goes sideways. Look at this. It goes sideways. It's flitting around our entry, which happened to be around about 8,600. So it's a round number as well. But for, here, this is the day we got in. So for 1, 2, 3, 4, 5, 6, 7, 8 days, best part of 2 trading weeks, it's sort of flipped sideways. And most of the time we've been sort of in the money, but it's not really done very much, would it? So would we have been moved out of that? Well, honestly, possibly I might have just got bored with it and moved out. However, what the indicators are telling us is that, don't just hold your patience, because what's happening? Well, the MACD and the signal line over those 8 days, if we do it to that section there, let me just put that in there. You can see that there. There's another great example, following this, trusting your system and just hanging on and not getting bored, not getting too aggressive with it. But let me those that jumped ahead, you can see what might be happening now. So how things don't always work out. So the parabolic SAR is looking quite positive. The histogram is quite positive, and our signal line and MACD line are both quite positive because of moving up. The histogram is getting bigger, and our parabolic SAR is still below our price action, even though we're not moving anywhere. Right, so the next day here, by the end of the beginning of December, the 10th, the 12th, we'd moved up quite significantly. By the 12th, we'd got all the way up there. Okay, and our stop loss, if we were still using our parabolic SARs, our stop loss was getting tighter. So as that has moved up, so here, sorry, this is the peak, intraday peak, isn't it? We got up here. This is our biggest profit gain, and this is still moving up. The what has happened by now, though, we've got this day here. It's gone from, but we'd already gone from a dark green to a light green, so it's less positive because we've had a closed day. Our stop loss is getting quite close to our entry, and we haven't really. No, it's 10, 12 days now. We haven't gone anywhere. Next day, parabolic, so the price comes down again. The histogram is smaller than the previous day, but not much. Nothing to get too worried about. The MACD and signal line is still positive, still moving up. but we get a flip on the parabolic SAR, and that would take us out because the parabolic SAR has flipped. So we're out for a very small loss, having held it all that time. There wasn't a trend moving. We went sideways. There was no direct trend price action, and then you can see how we get taken out as nothing has happened. So we're out. So we're now for a proper signal. We're now looking for a cross of the MACD line. However, the second way, the next way of taking this strategy is a continuation trade. So we've had a proper signal here, like a standard signal, if you like, here on the 27th of November, and we've been taken out on the flip of the parabolic SAR here on the 6th sorry, it's the next one here, isn't it? On the 16th of December. So we forget about it then, perhaps. However, what's still positive is the parabolic SAR, the MACD, which is the stronger of the two signals that we're using here, because we know that the parabolic SAR flips around a lot. And so by 3 days later, what's happened when we come back? We're still negative, so nothing happening, no continuation, no continuation. And here on the 22nd of December, it's Christmas time, tends to be a strong time of the year for stock markets. We have a third positive histogram. The parabolic SAR has flipped again. And we got new highs from when our original cross happened. So we're significantly above now where we got in. So we have actually missed obviously those 3 strong days of profit of moving higher here, but it's kept us out. So we can re-enter here. So our second entry would have been there on but with the caveat that this is a continuation trade. So I'll make this a dotted line, not a dashed line around the dotted line. So we've got a continuation trade here because the MACD hasn't crossed, but it hasn't crossed back the other way either. So we're not going short, and the price action has moved up from when we first got in. So although we missed it with the sideways action, we didn't swing. We had our turn, but we moved up and then went sideways. Then we got a leg up now. Then we got a bit of a retrace. Then we got another leg up, but we stayed in all this time now, you see. So that's our entry. Again, stop loss could have been, it's around about the 3 candle level as well as the parabolic SAR. So we use the parabolic SAR as our stop loss entry again. So we stay in all this time again. And there's the, we move down, but interestingly, we don't flip to go short, ironically. So we get that back. So this is, when it can play out. So we're out again this time. So again, we've got so that was our first winner, and this is our second winner here from the 22nd of December right through to the next one. It's there, isn't it? On the 21st of January. So again, a month has held that one, and we've got out not a massive amount of profit, but it's still, profit's a profit, isn't it? Following a very simple, stress-free two indicator system. Because again, excuse me. So remember what I said at the beginning about the higher time frames, the intermediate time frames, lower time frames. So with the daily time frame, it's clearly still up from when we first got in back here, isn't it? So we've had our turn here. We've had our turn here. So there's our turn. We got a minor turn there and got in. We got a turn there, but it didn't. There wasn't a turn, was it? Because it continued to move up. Little turn there. Little turn there, little roof there, and maybe turning now, but we're still, at the moment, we're still moving up. So you can see here the highs are getting higher, and the lows, we're getting lower highs as well, even through the flat movement. And all the way up here, you can see the MACD and the signal line are all positive all the way here from this first trigger here on the 27th of November. And what happens? Well, we do get, we do get a sorry, I'll leave that one in. We do get another cross to go short here. So no, we didn't fill all those out, but let's get rid of that. Let's take these off. I've got ahead of myself a wee bit there, so let's we'll come back to these in a minute. Okay. So we then get a cross here. So this big down day here, the 30th of January, that big sell-off day, not that long ago. So this here is triggering a potential short because we've had a cross there on the MACD. So that is a proper standard short position. So we take that back to the gold trigger there. It's crossed there, but we don't get into the following day when the MACD triggers. So we get short this time. Let's put that in. So we get short this time there. Stop loss is again probably through here, around, say not much difference this time, is there, through the top of the turn. So our stop loss is there. And this time it doesn't work out, does it? So we get short here, goes against us. Actually, we're into profit a bit on the first day, goes against us the second day. Third day looks like we're doing quite well. We're down. This is still moving down. This is still red. But there's a big hanging wick here. A hammer at the bottom of this little retrace move here. This low is still higher than these lows we've been before, and it looked like it was going lower. It looked like it was going lower on this the 5th of February, 6th of February, but then the 9th of February we turn around and we're suddenly quite strongly out of the money on the 9th of February. So after 1, 2, 3, 4, 5 days, it was worse on the third day. So might have panicked out if we'd pulled our stop loss down, but we hadn't. So by this day here, our stop loss is here. This day our stop loss is here, and we're out of the money quite significantly. This day our stop loss is here. Looked like it may have topped out here on by the 10th of February, but we do get taken out during the 11th of February, the following day, for a loser. So they're there because it was against the trend, wasn't it? This dip down was a retrace on the way up, so it crossed again. See what's happened here? So we've been stopped out on the 11th of where's the 11th of February gone? We've been stopped out here on the 11th of February, but during the day, because we had pulled our stop loss down on the night of the 10th of February. But what happens on the close of business on the 11th of February is the parabolic SAR has flipped to the downside, and we've had a cross. So that is a double whammy. So we go long, and we are still long now using this end of day strategy. So the last entry for the Aussie ASX was a long position using this strategy from the from the 11th of February, and it's remained long. So again, using the parabolic SAR, the stop loss have been all the way down there this time. Initially, again, a bit too gappy for me. All the way at the bottom of this wick, I'd have probably had it round about here. In fact, even closer when it started. But anyway, that's still long. And as we speak, if you're using the parabolic SAR as your stop loss, you're still you're actually out of the money as of yesterday. Let's get rid of that. Or out of the money yesterday, but it looks like there may be a rounding top coming here. So the parabolic SAR may be about to flip here. So we've got in. Actually, it's because it's a proper trigger, isn't it? It's, that one out of the way. I've got too many lines on there now. I'm confusing myself. So that's a long one there, the 11th of February. Out of the money for 3 or 4 days, but our stop loss was nice and meaty. I may have pulled it up because it's quite a big gap, isn't it? So I may have pulled it up a bit to this sort of level now, or even our entry candle, or even here now, possibly. That might be a bit too aggressive. But that's where my parabolic SAR MACD strategy for the ASX 500 would be at the moment. Today, because of yesterday's big sell-off, I'd be getting a bit twitchy as reason we've topped out here on the, looks like we've got a bit of a rounded top here on the MACD and the signal line. Yes, we're still creating higher highs, but we may be suggesting that there may be a bit of weakness. So let's see, or we might be just cooling and then we go off again. So there we go. End of day using the ASX on our strategy. Two simple strategies. We're waiting for a cross, both a continuation on the higher timeframes as well as the standard entry where the MACD and the signal line cross and the parabolic SAR goes in our direction, either already has or will the next few sessions. Okay, so that's the, I mean, it's a bit of a long-winded explanation, but let's just minimize that for a minute. So that's, you know, in real time, that's what I've just demonstrated what the words say here on my slides. Okay, so so as I say, the MACD, as I've written here, overcomes the choppiness of the parabolic SAR because it can be a bit too aggressive during strong trends. And we've just seen that, haven't we? And it kept us in when we were horizontal, we were flat. The price action was going to that, so we use it to for a parabolic SAR to take our profits. So just going over what I've just said. So we wait for the MACD line to cross over its signal line. We then, if the parabolic SAR has switched position, we then take our position, whether we're short or long. We put the stop sell. Again, you can either at the parabolic SAR for as we've just seen for a big safe stop loss, or I would as we just demonstrate there with those two different sizes of candles, a big candle and then a small candle. I'd put it 2 or 3 candles behind the turn or in the turn of the market, rather than this tightness around the. If you want to be strict and put it quite tight, if you've got a big candle on the entry candle as well, and then we exit the trade taking profit when the parabolic SAR flips. Okay, and they say don't reverse until the MACD has crossed again, so we don't go long or short if we've been in the opposite direction, taking profit with the SAR. We use the SAR because of its choppiness to get us in and out of the positions. And again, these is just diagrams on from an MT4 on the euro here, using an old this is in fact an MT4 account, not an MT5 account, but where the MACD was set up here. But you see the MACD is still the same, 226 and 9. Standard settings for the parabolic SAR here. The yellow dots here on my MT4. So again, you can see here the cross here. This is this instead of having the signal line and the MACD line on the old MT4 setup, it was the histogram and the just the MACD line. But you can see it still works the same here. So there's a difference here. There's the parabolic SAR's crossed here. The entries on this blue arrow here on this yellow line here that I think 6 years ago, 25th of how ironic, 25th of February, just as COVID was starting to grip us all, send us all mad. Yeah, there's the first signal. We've been the parabolic SAR has been the right side. It's then flipped here and got us out. I'm not going to go through all this again, but you can get the point. Then the flatness of the one I will highlight is the choppiness of the parabolic SAR when price action has been in a bit of a channel here through beginning of April, end of April, before it then moves into a nice strong trend here as it flips here and gets you in there, goes against you initially, but off it goes and running there. So these would have been losing trades, but we've had winning trades, the blue to blue, red to red. This 3 to 4, 1 to 2, blue to blue. 3 is that red. 4 is that point is there. Then we get some other minor signals, but it's flat, doesn't get out. There's the last one there. If that's 5 and that's 6 as it's flipped there, so a nice strong trend, and we've got most of that move there on the euro. So dollar CAD same setup with the MT5. So that's our MACD parabolic SAR strategy. Very, very straightforward. Two systems, two indicators. MACD's, I say, very popular. Parabolics are less people use the parabolics are. I know, but it's good for strong trends. It's good for certainly. I keep calling it catastrophic loss levels. It's it can be gobble up a lot of margin if you're using your stop loss at the parabolic SAR level. But as we've demonstrated, as the trend moves up and as the trend comes back against you, the parabolic SAR gets much closer to the price action. There's another good example of that. Here it's flipped here. Parabolic SAR's all the way down there. Strong trend, keeps you well in the money. But as it rolls over there, those 2 or 3 days there, see how the parabolic SAR comes up quite close to the price action. It doesn't actually flip until this level, does it? So it takes you out a similar price level, but it keeps you in for 6 or 7 days more trading. If this, daily is dollar CAD. So there we go. That's the parabolic SAR and the MACD strategy, my friends. We demonstrate on the ASX. Let's just pick let's just look at some other assets. Let's look at Litecoin here on the cryptos. I'm using charts that I haven't got any lines on our previous action. You can see, strong downtrend here in the parabolic SAR, tightness. There's a big downtrend there. So there's your mighty cross there on the 12th of January. Again, you don't have to be the world's greatest trader. You can see, again, if you'd got in here, again, just use this as an example and how, some traders trade this quite calmly. So that's our entry. If my stop loss is up there at the parabolic, so let's use this as an example at the parabolic SAR. We've just moved this down, haven't we? As we've moved down. So we're in the money here. Sorry, I'll leave that there. Sorry. So that's my entry, and we get down. We pull it down. It's nowhere near. Now we're in the money here by the 24th of January. Price is going sideways. Parabolics, the price actually getting close to the parabolic SAR, but we stay as it reverses. Doesn't reverse much. The nice drop, huge strong move down on the MACD. Signal 9, nothing. Still in profit. All the way down here. Nicely in profit, and we flip there before we get a turn. So that's our exit point there on the 9th of February. So again, nearly a month run like we saw there in the ASX. I'll use a different time frame as well. Somebody's asking me to use a different time frame to demonstrate. I'll do the same thing in a minute. But there we go. Entry here on the 12th of January. Stress-free trade because we've pulled our stop loss down. Yes, we've used quite a bit of, or had at some point using quite a bit of margin with our stop loss quite away from the price action. But even here on the day, we flip here, close of action on the 9th of February. It's gone to close our position. So we've got in at 75.78 and we've got out all the way down here at 58.37. And let's do a quick calculation how much that's made us. So what's that? 75, 78 minus 58. Hang on a minute. No, we didn't get out at 58, did we? We got out. That's what it's on there. It was lower than that, you fool. That's where the stop loss was, because the stop loss just flipped. So we got out at what's that? 54.75. Yeah, 54.75 is where we got out at. So 75. So I should have seen. Using the live chart, see, minus 54.75 equals, oh dear God. It's about 20, isn't it? That's, oh my word. So say 20 divided by 75. I'm trying to do this live and it's falling apart. So we made about 26% basically on that massive move there on Litecoin, excuse me. So we gone from 75.78, we're short, and we got out at 54.75. Thanks very much again, eagle-eyed of you will have noticed it's flipped the other way. So we've got another entry here. Second entry would have been on that day there. A few days later, let's change the color again to purple so we know what we're doing. So this has gone long. Our stop loss is down here. And it's not worked out this time, has it? The long, yeah, it's long. So there we are. We got in here. There's a stop loss there on the parabolic SAR. Or I mean, could have had it a bit close, a bit tighter, but let's just follow what we're talking about. Entry here, and it's just done nothing, has it? As we've seen, the weakness in cryptos continue. So we've gone sideways action. This is when the system isn't great, but as the price has moved, as the price has moved along, our stop loss has moved up. Our stop loss was here on the 22nd. What's it today? The 24th. Our stop loss was here on the 22nd. Parabolic SAR still haven't flipped. Parabolic SAR flipped yesterday, so we were out on the close yesterday. We've probably been out. Stop loss might have hit it before that. So that's a losing trade. So we've lost. What's that? Closing trade 51. So we lost, having made 20 odd dollars. We've given back $5, and we're now waiting for the next trade, basically, on that one. So there we are. Somebody was asking me about doing a different time frame, so let's just pick something else. Let's pick pick a forex pair. Somebody, dollar CAD. No, there'll be something on there. Let's do one we haven't got. We don't trade much. Aussie, Euro, Oz, for the sake of, and that's a daily. Let's pick a time frame. Somebody. 2 hours. Somebody said 2 hours. Okay. 2 hour time frames. Again, following the rules, guys. Obviously more choppy because it's forex. And yes, good example of it not working here, actually. Very good. So what's our last trade? Well, our last trade was long. No, it wasn't. It was short. We're out there. Well, it's messy, isn't it? The last trade was this one here. There's the proper cross on that candle there. So it's 2 hour time frame. Let me just change to, I'm saying it works on all time frames. Don't know many people trade 2 hours, so just bear with me a second. Let me just change it to 4 hour. Give it a bit smoother. There we are. So it's a bit smoother. There's the again, it's a good example of, it's far from perfect, as no strategy is perfect, my friends. So just bear that in mind. So here we've got a cross to the upside, but we haven't got a move on the parabolic SAR. So you can see we'd moved down, and then the blue has crossed here, there, on that there. But the parabolic SAR is still above. So it's 2 more candles before the parabolic SAR flips to the downside. So we get long here. Okay, so the last entry is here on this one. And this is going to be the last example I'm going to use. Hope you don't mind. Somebody said, can you use the 1 minute? Oh, the short time. We will use short time. Bear in mind, it flips a lot. Okay, so that's our entry. Stop loss is down here again at the turn of the market. It's a long way away this time, obviously. Monster stop loss if we're using it at the parabolic SAR. If we'd got in here with this price action, mine would have been round about just here, I think. It might have been a bit too tight and taken out. But at the moment, let's just do it as the rules say. So there's our entry. There's our stop loss. We're now in the money, but with a bit of a heavy stop loss. So what I would have tended to do would have moved it a bit closer. So now mine would have been sort of up here, if not below those candles, certainly above those, as I'm finally in the money. And again, that's me interfering with the real rules, giving it time to breathe. But given that we've been out of the money for 1, 2, 3 candles, it was quite a lot out of the money, wasn't it? But our stop loss was all the way down here. So that's in the money now. Euro, Oz on the 4 hour and up. So final one. Somebody said use the short term. So let's use sterling. Sterling against the yen, the guppy, that just chop around a bit. And let's have a look at it on the 5 minute time frame. Also, in and out, more choppy by its very nature. So what's this one? The last one we had on here was a short, which is lost, hasn't it? Because we've we've been going long, and it flipped to go short. Right, there we go. It's a good example of the choppiness of using it on a short-term basis. So that doesn't work. I hadn't worked on there. So we'd have got short here on that drop there, and our stop loss would have been, again, if it's been a catastrophic, a big stop loss at the parabolic saw would have initially been up here. It's come down to this one. It's come down to there. So it's probably been stopped out, maybe not. But it looks like this is going to cross again. So it's too choppy. It's proving too choppy here on the pound yen on this short-term time frame. So as I say, it is better on the higher time frames, but you can use it on other time frames. Here you can see it's successfully worked out here. There's the flatness of the price action. We get a nice strong cross. In fact, it crossed. It touch it. Didn't actually cross until that moment there. So, it does work on these shorter time frames. That's the again, because it's a trend following strategy. So big candle there at 1:15, and up we go, and we flipped and got out on that one there as it's crossed again. Possibly as it's short term, we might have had the would have been taken out on that one. So again, it's not just using that one again. So that one's got in there. If we've used our parabolic saw as our stop loss, it's been it was here. Our stop loss was here, and when the price was up here. So that was our lots of winner, and we've given a lot of it back because of the nature of forex and the choppiness of it. But we still made profit. We got in here at 1:15, and just purely using the parabolic saw as a stop loss, we got out at 2:30, an hour and 15 minutes later. So a nice swing for an hour or so, and we've made from 2:10.33 to 2:10.43. We've made a whole 10 pips. There you go. But 10 pips is 10 pips, isn't it? If you're trading a 5-minute time frame, and it's a profit, not a loss. Unlike this one, which had actually been a loss by the looks of things. But that is now looking to go long, isn't it? So we had a touch. We haven't had a cross yet, but the parabolic saw's already flipped, so that might be. Don't wait till it's completed. Remember, don't jump into yet. So it's moved away again, so it might not be flipping. But there you go, my friends. Any questions? Do let me know. But thank you for your time today. Let me just get rid of the close the window. I'll minimize it. Close it. So that's our MACD strategies. Just as with most of my webinars, close with my 3 favorite trading books of all time. So there we are. We've looked at what is a swing trader, the importance of liquidity and the time frame. We just demonstrated there the hourly time frame, the daily time frame. Really successful and loser on that 5-minute time frame. What makes a good swing trader? So with the trend again, we didn't actually look at that, did we? But were those 5-minute time frames with the high time frame trend? We didn't. We just took them, didn't we? I saw them. So again, bear that in mind when we're moving forward. So thanks for your interest today. We are theproptrade.com. We're here to help you. And as I said at the beginning, if you only got a few dollars to get started, we have got this $9.99 offer for our new tweaked pay flex account, and you can pick the size of your account. It's only a 3% profit, only 50% profit share. That's downside of it, but you do still take away half of your winnings for a very small investment, and you pay after your third profit withdrawal. So have a look at that if that fits your time frame. Lots of different types of accounts, everything from our 1 and 2 step standard accounts to our PayFlex accounts. Lots of platforms. We've got MT5 now. We're very proud of getting our MT5 account, the Trade Locker, which is still very popular, and C-Trader as well. Different platforms for different traders. We're here to help you, my friends. Okay, so I'll see you tomorrow. Tomorrow is Wednesday. What we're doing tomorrow, I can't remember off the top of my head. It's obviously we got the State of the Union speech from Trump tonight. Tomorrow after the market closes on Wednesday is Nvidia with their earnings report. But I can't remember off the top of my head what I'm doing with our webinar tomorrow, but I'm pretty sure it's Wednesday, so I'm trying to find it here and I can't. But anyway, I will let you know on our Discord group. Do follow us on Discord if you're not with us. This is where all the information is put up, where all our support guys are. The main is the general chat, and I didn't send that earlier. There we are. I did send it last night, but general chat for our support. And any trades, I haven't been updating this week yet. So our end of day trades that I put on getting here, but Shashwat and lots of other traders posting their trades as well on here. So do come and join us on our Discord group. So that's all for now. See you tomorrow. Take care, be safe, and may the pips be with you, my friends. All the best. Bye-bye.